For 5 years, Miami and Fort Lauderdale served as the twin engines of a historic real estate miracle, drawing remote workers and global investors into a frenzy of appreciation that pushed home values up nearly 50%. By 2026, however, this legend has collided with the harsh reality of affordability. With median home prices soaring past $400,000 against stagnant local incomes, the market has finally hit a ceiling. This is not a repeat of the 2008 collapse, as there is no subprime crisis or flood of distressed inventory, but rather a necessary rebalancing. The region is experiencing its first year-over-year price decline in half a decade, driven by a cooling in buyer enthusiasm and a slight net migration outflow. The narrative is shifting from a singular boom to a complex, bifurcated landscape where the overall market is catching its breath after years of unsustainable, rapid growth. The once relentless tide of capital has begun to recede slowly, leaving behind a landscape that feels fundamentally different from the feverish pace of previous years' cycles. Investors who once bought with reckless abandon now pause to calculate the long-term viability of their portfolios, while locals struggle to find a foothold in a city that feels increasingly out of reach. The sheer velocity of the appreciation has left a vacuum where once there was vibrant activity, forcing a recalibration of expectations across every neighborhood, from the beaches to the inland suburbs. High interest rates have acted as a sudden brake on the momentum that defined the pandemic era, transforming the once frenetic open houses into quiet, contemplative viewings where buyers hold all the leverage now. This transition is not merely statistical, but deeply felt in the daily lives of residents who witnessed their neighborhoods transform overnight. The air of invincibility that surrounded South Florida real estate has evaporated, replaced by a cautious optimism that favors stability over the wild, speculative gains of yesterday. Developers who once broke ground on every available plot are now reassessing their timelines, waiting for the market to signal a clearer direction before committing to new, massive projects in the area. This pause is essential for the health of the region, preventing the kind of bubble that historically leads to catastrophic failure. Instead, we see a slow, controlled descent toward a price point that might eventually align with the actual earning power of the local workforce and regional economy. It is a period of adjustment where the sheer volume of transactions has diminished significantly, leaving brokers to navigate a landscape defined by patience and strategic negotiation rather than bidding war chaos. The exuberance of the past has been replaced by a sober analysis of fundamentals and value. Every transaction now carries the weight of scrutiny, as buyers demand transparency regarding property taxes, insurance, and the long-term maintenance costs that were previously ignored during the height of the gold rush. This shift represents a maturation of the market, moving away from the speculative frenzy that characterized the last half-decade toward a more sustainable model that values quality and location over mere hype. As the dust settles, the true strength of the region will be tested by its ability to retain its appeal while becoming a place where people can actually afford to live long-term. The twin engines of Miami and Fort Lauderdale are still turning, but they are no longer running at the red line, allowing for a cooling period that benefits the entire metropolitan area's future. The era of easy money is over, replaced by a new chapter of careful, informed investment. This is the reality of a market finding its footing in a changing global economic climate. The dream of South Florida remains, but it is now grounded in a more realistic valuation. Investors are watching closely, waiting to see if this rebalancing will lead to a soft landing. The local economy is adjusting to this new normal, finding ways to adapt to the constraints. It is a complex process, but one that is necessary for the long-term health of Florida. The market is not crashing, but it is certainly breathing, letting out the tension of years. Buyers are becoming more selective, and sellers are learning to adjust their expectations to the reality. This is the story of a region growing up, moving past its teenage years of volatility. The foundation is being laid for a more stable, predictable, and ultimately more prosperous real estate. The future of South Florida depends on this transition, ensuring that growth remains steady and sustainable. We are witnessing the end of a legend and the beginning of a more mature market. The cycle continues, but with a different rhythm, one that demands respect for the underlying economics. The frenzy has faded, leaving behind a clearer picture of what the market is truly worth. It is a time for reflection, for planning, and for understanding the nuances of this change. The landscape is shifting, and those who adapt will be the ones to thrive in tomorrow. The market is catching its breath, preparing for the next phase of its evolution and growth. This is a necessary evolution, a path toward a more balanced and equitable housing market environment. The exuberance is gone, but the potential for long-term stability remains stronger than ever before today. Investors and residents alike are navigating this new terrain with a sense of cautious, renewed purpose. The region is finding its equilibrium, a delicate balance between the past's growth and future potential. As we look ahead, the focus shifts from rapid appreciation to sustainable, long-term value and stability. The South Florida market is maturing, and this rebalancing is the first step toward that future. The legend of the last 5 years is now a lesson for the next decade ahead. As the market catches its breath, the year 2026 reveals a stark, deepening divide. A massive chasm now separates resilient single-family homes from the struggling, aging condominium sector. Single-family inventory remains remarkably tight, constrained by the region's limited and crowded geographic footprint. This scarcity continues to force prices upward, defying the broader cooling trend seen elsewhere. Conversely, the condo market is reeling under the heavy weight of new safety regulations. Rising insurance premiums have become a crushing burden for owners of older, high-rise properties. Massive special assessments are now common, forcing many unit owners to reconsider their long-term investments. Buyers are now prioritizing newer, hurricane-resistant construction over the charm of older, vulnerable buildings. This shift leaves older structures to face significant, painful price corrections in the current climate. Meanwhile, the luxury segment continues to thrive, seemingly insulated from the sting of interest rates. Global wealth and corporate relocations provide a steady, reliable floor for these high-end assets. As inventory levels rise across the board, the average days on market continue to stretch. The region has officially transitioned into a more balanced environment that favors the informed buyer. Success in this new era requires moving beyond broad, sensational headlines to analyze specific data. Investors must now scrutinize individual asset classes and the complex financials of specific buildings. South Florida is evolving from a speculative gold rush into a mature, highly segmented market. The landscape is finally finding its new, sustainable equilibrium after years of wild, unsustainable growth. This is a period of necessary adjustment for all participants in the Florida real estate. The frenzy has faded, replaced by a calculated approach to property ownership and financial planning. Every neighborhood tells a different story, reflecting the unique pressures of this changing economic reality. Buyers are cautious, taking their time to inspect every detail before committing their hard-earned capital. Sellers are adjusting their expectations, realizing that the days of instant, massive profits are gone. The market is no longer a monolith, but a collection of distinct and shifting microeconomies. Those who understand these nuances will navigate the coming years with confidence and strategic foresight. The era of the speculative gold rush has officially ended, giving way to professional analysis. Sustainability is the new benchmark for value in the vibrant, sun-drenched streets of South Florida. As the dust settles, the true strength of the region emerges through careful, deliberate investment. The future belongs to those who look past the surface to understand the underlying mechanics. Miami and Fort Lauderdale are maturing, proving their resilience in a complex, globalized financial landscape. The rebalancing act is complete, setting the stage for a more stable and predictable future. Local agents observe that buyers are now demanding transparency regarding building reserves and maintenance history. This shift in buyer behavior is forcing older associations to address deferred maintenance with urgent priority. The cost of inaction is now clearly visible in the discounted price tags of older units. Conversely, modern developments are commanding premium prices due to their robust structural and financial health. The divide between these two categories of real estate is widening with every passing fiscal quarter. Insurance carriers are becoming the de facto gatekeepers of the condominium market in South Florida today. Their risk assessments dictate which buildings remain viable and which ones face insurmountable financial hurdles. This creates a tiered system where only the most well-managed properties attract competitive financing options. For the average buyer, the due diligence process has become significantly more rigorous and time-consuming. Navigating these complexities requires a deep understanding of both local zoning and statewide insurance mandates. The influx of international capital continues to provide a unique buffer for the luxury high-rise sector. These buyers often prioritize location and prestige over the immediate concerns of local insurance premiums. Consequently, the luxury market operates in a parallel reality, largely unaffected by the broader cooling. This duality makes it difficult to paint the entire South Florida market with one brush. Data points must be disaggregated to reveal the true health of specific neighborhoods and asset types. The transition from a seller's market to a balanced one is a healthy sign of maturation. It allows for sustainable growth that is not predicated on irrational exuberance or speculative frenzy. Developers are also adjusting their strategies, focusing on projects that meet modern safety and efficiency. The focus has shifted from rapid, volume-based construction to quality-driven, long-term value creation for residents. This shift is essential for the long-term viability of the Miami and Fort Lauderdale metropolitan areas. The regional economy remains anchored by a diverse mix of professional services and growing industries. This economic foundation supports a steady demand for housing, even as interest rates fluctuate periodically. The upcoming FIFA World Cup serves as a catalyst for further infrastructure and urban development. Such events highlight the region's global appeal and its capacity to host major international gatherings. Investors are watching these developments closely to gauge the long-term potential of residential real estate. The path forward involves balancing the need for growth with the reality of environmental constraints. Geography remains the ultimate arbiter of value in this narrow coastal strip of land. With the Atlantic on one side and the Everglades on the other, space is finite. This geographic reality guarantees that well-located properties will always hold significant, long-term intrinsic value. As we head into the second half of 2026, the market is finding its footing. The initial shock of the correction has given way to a period of pragmatic decision-making. Buyers are no longer rushing into deals based on fear of missing out on opportunities. They are taking the time to compare options, negotiate terms, and verify the structural integrity. This methodical approach is exactly what the market needed to stabilize after years of volatility. Sellers who recognize this new reality are finding success by pricing their homes more competitively. The days of testing the market with aggressive, unrealistic prices are largely behind us now. Transparency is becoming the currency of choice for successful transactions in this evolving real estate. Both buyers and sellers are benefiting from a more predictable and stable transactional environment today. The role of the professional real estate advisor has never been more critical than it is. They guide clients through the maze of insurance, reserves, and shifting interest rate expectations daily. Their expertise helps bridge the gap between the market's historical performance and its future potential. The broader narrative of people moving to Florida remains a powerful driver of long-term demand. However, the pace of that migration is now being tempered by the reality of affordability. This creates a more sustainable inflow of residents who are committed to the region's future. The market is maturing into a more resilient version of its former, speculative self today. Every transaction now reflects a deeper understanding of the risks and rewards involved in ownership. This level of sophistication is a hallmark of a truly world-class, mature real estate market. Looking ahead, the focus will remain on quality, location, and financial transparency for all participants. The lessons learned during this period of adjustment will serve the region for many years. South Florida is proving that it can adapt to changing economic conditions with remarkable speed. The resilience of the single-family segment highlights the enduring appeal of the region's lifestyle. The correction in the condo market is a necessary step toward long-term structural and financial. As we move forward, the market continues to refine itself into a more stable entity. The story of South Florida real estate in 2026 is one of evolution and resilience.